Welcome to the Kinvestor Report, where we conduct insightful interviews with industry experts to discuss the small cap Canadian markets. I'm your host, Arlen Hansen. Before we begin, I'm mentioning the standard disclaimer that no part of this interview is to be taken as investment advice, and I may or may not own shares of the companies mentioned in this interview. If you find these interviews of value, be sure to join our network, subscribe to our page, comment on the videos below, and share them with like-minded investors. Today, I'm welcomed by Peter Krauth, publisher of the Silver Stock newsletter and author of The Great Silver Bull. Peter is a former portfolio advisor and a 20-year veteran of the resource market with a special expertise in precious metals, mining, and energy stocks. He's contributed to numerous articles to Kiko, B&M Bloomberg, The Financial Post, and many others. Peter covers the whole spectrum of silver, from owning physical, investing producers, developers, and junior explorers in a monthly letter for subscribers. Peter, great to have you on the show here today. How are you?
Well, thanks. Thanks very much for that, Arlen. I'm great, and I'm happy to be here, and I'm looking forward to our chat.
Great to hear, Peter. It should come as no surprise to anybody listening to the show today that we want to talk to you about silver. You've been a very long-term precious metals bull, but I kind of wanted to get an understanding on what made you fall in love with silver as your specialty metal.
So, I have actually I'm going to say, if you include the last, say, 3 or so years, I have been very bullish and spent a lot of time researching and writing about both gold and silver for the past, say, 13, 14 years. And so really what I guess helped towards the focus on silver dates back to late 2020. That's when I connected with Gwen Preston of the Resource Maven, and we decided to brainstorm and launch a newsletter. And so silver just seemed like a natural. For me, it was very much in my wheelhouse, very comfortable with it, spent a lot of time understanding it and so on. And from Gwen's perspective, she saw that a lot of her subscribers had been regularly asking for more on silver. And, having been covering the area pretty extensively for years, saw that there really was one other newsletter that was dedicated to silver. So it really seemed like a natural fit. It really was an underserved niche in the investment newsletter area. And so decided to launch in January of 2021. So we're here 2.5 years later. It's been going very well. Great growth in demand and subscribership. And by the way, for whatever reason, that one other newsletter doesn't exist anymore. So now this is the only one.
The one and only. You are the one and only. There you have it, folks. The one and only Peter Krauth. Well, yeah, like in history, there's been a lot of writers that focus on gold, right? You go back 20 years ago, Lawrence Ralston, Brian London, Eric Coffin, a lot of these people, Jay Taylor, they were very, very gold focused. So yeah, good recognizing and a way to give the market something that they need. That's for sure. I'm curious, when you're looking at silver, do you look at silver as a precious metal, industrial metal, a clean energy metal, or really just a hedge on currency?
So the answer is yes, all of the above. If you look at if you just look at it on a pure numbers basis, I guess the demand and supply. Demand really is almost 50-50. It actually weighs a little bit towards industrial. So about 55% of silver demand is industrial in some form or another. And then the balance, so almost half, 45 to 50% is some form of investment demand. At least I qualify as investment because it covers pure investment. So things like physical coins and bars. It covers things like silverware. It covers jewelry. So if you lump all of those three together, you really do reach that 45 or so percent, which, as I say, for me, in some form represents investment. And then the industrial side, which for me at least incorporates the energy metal aspect of silver, has been actually growing. So most of silver history, it was money. And that changed maybe a couple hundred years or so ago. It started to make its way into a few other things. We started to use it to back mirrors. It started to be used in photography, and then eventually in electronics. And I'm going to say in the last 50 to 60 years or so, that really has taken on a little bit of a life of its own. Photography, naturally, with the advent of digital photography, the physical film has gone away. It's actually coming back a little bit. You do see silver still in some developing nations and things like X-rays for film, et cetera. But that really has been kind of withering away. But it's being replaced by demand from a couple of other sectors. So within industrial. And so the two main ones are electronics and electrical, and solar being a really big one. There's also medical. So we've known the medical advantages of using silver for, I'm going to say, hundreds, if not thousands of years. I mean, in different forms, silver is great as a biocide. So it kills bacteria, and the bacteria do not grow accustomed to it. So it continuously works against bacteria. So, some people have told me stories about growing up where, this may be from a developing country, but where they would take silver coins or pieces of silver and dump them into wine barrels to help keep wine fresh. You use silver in water filters. That's very common today to help keep the water clean and again, kill bacteria. But like I say, the two big ones are electrical and electronics. Silver is the single most conductive element. So bar none, the single most conductive element, both for electricity and for heat. And it's also the single most reflective metal that's out there. So everything is measured against silver at a benchmark of 100. So really, silver has some really unique properties, and it really does make it irreplaceable in a ton of its applications. And I've gone on for a while now, but
yeah, no, that's interesting. So when you're looking at your investment thesis for silver, it's more along the lines of industrial uses versus I'm buying it for a tariff premium or I'm buying it against inflation.
So, okay, here's how I would put it. I believe that the industrial demand aspect to silver demand is significant and robust enough that it will continue to climb quite steadily over the next decades. And that because it's so steady and the drivers are so clear, which we can talk about in a bit, that the industrial demand will help to provide a rising floor under the silver price. And that it's going to be the investment demand that, as we, maybe sort of jump from crisis to crisis, is going to be what will generate the volatility, the upside volatility in the silver price. And so that's how I qualify, the two big demand drivers and how they contribute to the silver price.
So we talked a little bit about the increasing demand, and solar is definitely taking the news right now. I think I read somewhere today that by 2050, China's solar power will basically take up all of the silver production worldwide. How do we even meet those types of numbers?
So let's just look at them a little bit, drill down, and to get some perspective. China really is the 800-pound gorilla, or whatever that saying is, in this sector. They are about 80% of solar power production capacity, and that's really continuing to grow very dramatically. They're also a huge market for solar power installation. And really, it's for China, it's really split pretty much down the middle between distributed power and sort of utility use. So you've got people and you've got companies that are just deciding to put it on their building roofs. And then you've got the utilities that are building out solar as well. But if we look out sort of on a more of a macro view of solar, it's interesting that according to the International Energy Agency, 2021 solar power installations are so that the level of 2021 is likely to rise sevenfold by 2030. In other words, the amount of power from solar is supposed to be up about 7 times between 2021 and 2030 if we're going to be if we're going to meet our ongoing targets towards net zero by, say, 2050. So the implication of that is a 25% annual growth in solar panel production to get there. And so, and I actually was looking at some research just earlier today and watched a webinar from a consultancy in the sector, and they're talking about perhaps 30% year over year growth, not even 25% to try to meet those targets. Okay, so that's one thing. That's the growth of solar power build out to produce the power and to make our way towards those targets. Then you have the silver that goes into these panels. And so for some perspective, just in 2021, it was about 110 million ounces out of a 1.2 billion ounce demand market every year. Let's back up actually for a second.
Okay.
So for perspective, the silver market demand wise is about 1.2 billion ounces a year. And yet supply is just from mining is just 800 million ounces. So the balance of total supply, about a billion ounces, which is still short of demand by over 200 million ounces, comes from recycling. And so again, if you add up mining and recycling, you get to a billion ounces, and yet demand last year was 1.24 billion ounces. So 3 years ago in 2020, there was a surplus in the silver market of about 50 to 60 million ounces. Then in 2021, there was a shortage of about 50 million ounces. Then in 2022, there was a deficit of 237 million ounces. So we went in the space of 2 years from a surplus of 50 million to a shortage of 237 million. So that was a swing of over 300 million ounces in 2 years. And according to the Silver Institute, it actually wiped out the surpluses of the previous 11 years worth of surplus.
Oh, wow.
So that gives you some perspective.
Yeah. Well, not that I believe the COMEX and the numbers that they
Sure.
published, but inventory levels sure look to be at all-time lows.
Absolutely. And
right.
they just, for whatever the significance may be, they appear to be constantly being drained. You could say the same actually for the silver ETFs. That's something we haven't seen for, I'm going to say, almost 10 to 15 years. In the last maybe 6 months or so, you've seen the silver holdings and silver ETFs actually start to fall. And I at least believe that you've got some larger holders of units of these ETFs that are standing for delivery, and they're taking delivery from those ETFs.
Oh, wow.
And so you see, yeah, absolutely.
Mm-hmm. Let's talk about the silver squeeze. Do you think this has helped or hurt our market?
I think it's done a bit of both. I think it has mostly helped. The hindered aspect of it is that it probably drew a bunch of people in who perhaps hadn't followed the market that closely and just sort of jumped in when things were almost peaking, at least on a short-term basis, and probably got burnt. So that's unfortunate and you do see that all the time. It's not just a silver squeeze. You see that all the time in all kinds of markets, whether it's stocks, oil, tech stocks, silver, gold, lithium, anything. But what it did do, I believe, is that it did draw a lot of the younger generation into the silver sector, make them aware, because it was related to this whole meme stock thing.
Yeah.
And so that was sort of the genesis of the silver squeeze, that it did draw a lot of younger people in. It made them aware of the silver market, aware of the potential. And I think that they're on board. And, they part of the silver squeeze was to buy the SLV ETF. We did see the outstanding shares of that just absolutely take off and have, for the most part, maintained. And I just think overall, you've just drawn a whole new subsector of the investment of investors into the silver space. And I think that I was just reading something the other day about about gold. This was, I think, some research put out by a gold ETF, and they were saying that they've done, their sort of their own surveys and research internally, and they found that the largest subgroup within the owners of their ETF is actually millennials.
Really?
So yeah, they actually own more of this particular gold ETF than Gen X and boomers. And I thought, wow, that really speaks to the appeal of the precious metals. So I think that it has a really bright future going forward. They're very informed. Here's a little anecdote. When I released the book, it was actually a friend of my son who did the cover for me, and so I brought him a copy of the book. And I said, here you go. I thought you'd like to see, what the final product looks like. And he said to me, he goes, this was May of 2022, and silver was doing okay, but nothing gangbusters. And he said, your timing is really good. And I said, well, what do you mean? That kind of, it took me aback. And he said, well, a lot of young people are really making a point of going out of their way, doing their own research, looking for alternatives. They had seen that since the beginning, late 2021, early 2022, stocks had pretty much peaked, tech in particular, and they were looking for alternatives. And he felt that people were going to be, especially younger people, were going to be open to that. Well, if you go by what I was just saying about this research from this gold ETF, I think it was actually State Street. The proof is there that you've got younger people who are gaining exposure to the precious metals without doubt.
Well, is the millennial generation the first generation that doesn't trust the government and doesn't trust the banks?
I wouldn't say first, but to a greater degree.
To a greater degree. Well, they get more mass movement, right? Through social media.
This is true.
Right. Absolutely. For sure. So they get bigger buy-in from a bigger group of people all at once. Right. Exactly. So that's something that we haven't seen before, but that's very, very encouraging. I'm always a big advocate of pushing education, and where is these next set of engineers and geologists coming from? Well, they got to come from our next generation of youth, and it needs to start there. Right. Exactly. Otherwise, we're not building silver mines. We're not building new gold mines. We've seen that time and time again. What do you think's changed in the last 10, 15 years in the perception of silver and investing in the silver market? And I'll put that in context. I remember, when I was first buying gold and silver, in 2000, 2005. We were buying it for that terrorist premium. We were buying it for that inflation hedge. We were buying it for, the collapse of the US dollar. Now we get a terrorist headline every day, a bank's collapsing every day. And yet we don't see that kind of premium in these precious metals anymore. It's like we've been totally muted to this news anymore that's saying, hey, look at the problems in this world right now. What are you doing for your safety? Exactly. And it doesn't feel like we're getting that buy-in. That was the question. But what's changed in the last 10, 15 years in regards to why people are buying precious metals or precious metal stocks?
So, I mean, the precious metal stocks, they've been, to put it, I guess, pleasantly, they've been challenged, a little bit of late the last few months. But yet, and they have, and to be fair, the premiums on the physical have come down in the last little while. It's something that I do follow relatively closely, because if you go back maybe 4 to 6 months on physical silver, the premiums were just crazy. I'm talking 75 to 80%, and now they've come down to, in some cases, maybe 25 to 30%. It's still not what you'd consider normal, because those premiums in normal times are probably 12 to 15%, but they are a lot closer to normal. And I think that, there is a lot of, variability over time. And this is very much sentiment driven. Sad to say, but perhaps to some extent, the premiums have come down because maybe you have people that are looking to liquidate something that is liquid, right? That holds value, and are bringing their physical silver, cashing it in, and, making use of that cash to make rent, to pay for groceries, all sorts of things, because it's all, it kind of makes me laugh when people say, oh, look, the rate of inflation has come down from 9% to say 4%. But are they forgetting that that still means that in the last month, prices are still 4% higher than they were prior? I mean, we've had this, 5 to 8 to 9%, increase in prices, and we continue to get increase in prices, but at a slower rate, slightly slower rate. They're still increasing. So, I mean, these are huge burdens for people. And I think that may have been playing in the last maybe month or so in terms of premiums in some of the physical silver and gold, which, as I say, have come back a little bit back down to earth.
Well, maybe these people are using silver for the purpose in times of emergency. Look at that.
Exactly. Yeah.
Talk to me about this, the premium over buying physical, right? Like I buy all my physical through the Sprott. I, to be quite honest, I didn't realize that that premium fluctuates on any given time. Tell us, what are the mechanics of that and how does that work?
Sure. So, I mean, it really all comes down to what the dealers have in terms of availability and inventory. And I've looked at this and spoken to them multiple times. And when the premiums are really high, it's because the market is extremely tight, and people are either, just there's a lot more buying than there is selling.
Yeah.
So, it really comes down to it being that simple. You have a lot fewer people when premiums are that high. You have a lot fewer sellers than you do buyers. And these absolutely do come in waves. But I mean, I've been following this space for, 20 years at least. And what we saw during the great financial crisis, 2008, 2009, and in the aftermath of that, what we saw in 2020 when COVID hit, what we saw, I'm going to say, probably in the last 6 to 9 months, especially when we had most recently these bank failures in the States and in Europe, premiums just exploded. And I think it really just comes down to people wanting to hold the physical way more than being willing to sell it, for certain periods of time. Could be weeks, months at some points, but we've seen periods where it's lasted 6 months, 12 months, even 18 months, where you've had these elevated levels in premiums. And just for people to understand a little bit why we have premiums, as I say, again, if we stick to what may be normal, 12 to 15%. In physical silver, for example. So the spot price on silver might be $22 or $23. And if you're paying, say, somewhere around $27 or $28 for a silver coin, well, there are a lot of things that go into it. First of all, the smaller the silver piece, the more the value of the work to create it has to go into, right? And if you compare it to gold, because a single ounce of silver is that much less costly, yet it's similar amount of work as it is to create an ounce or a coin, a mint coin for gold. You're going to have to distribute the costs over a smaller value, and so therefore you have these higher premiums. Yeah. You've got these things called seigniorage, which is the mint actually producing the coin. You've got distribution. You've got the profits that the dealers want to make. And so when you add all of that up, it does make sense that you're paying higher premiums for silver than you are for gold, for example.
That, kids, is a true example of supply demand versus the COMEX market.
That's exactly right.
I'll bring it up again.
Exactly right.
Okay, so when we talk about your portfolio, that's a little bit about the physical side. You cover producers, developers, and junior explorers in your letter. Can you talk about that balanced approach on why you do that? And
absolutely. So, I mean, it's all about controlling risk. And this does not have to apply to anyone in particular. Everyone hopefully knows themselves enough to decide how to balance a portfolio in terms of silver investments. But I do think that physical is the bedrock, and so that makes sense. I think somewhere around 10% at a minimum, it should be that bedrock for your silver allocation. And then from there, I go to things like silver ETFs. So when I say ETFs, I mean mining ETFs. You've got a couple of larger ones or larger cap ones, and you have a couple of junior ones. And since these are internally diversified, if you combine producers and royalty companies and ETFs, for me at least, that can make up about 50% of the overall silver portfolio allocation. And then from there, I'd say 20% to developers and growing developers, and then another 20% to explorers. And that's obviously where you've got your highest risk and your highest potential upside. But for me, that's what I feel is a reasonable way to kind of balance that portfolio.
That's what we call the fun stuff.
Exactly.
So can you rattle off a few names kind of in each subsection that you like?
Sure. So, I mean, if we start with, so the main, so there are a few, but the sort of larger and more established silver ETFs in terms of mining companies or mining ETFs are the SIL ETF for the larger one, SILJ for the juniors. And they're really not actually juniors. They're a lot more mid-tier sized. So that's a bit of a misnomer. And you do have actually a lot of gold producers sprinkled in there just because the market is so small. And it depends how they define their index. And then from there, in the larger producers and royalties, you've got Wheaton Precious Metals, which has about 45, I believe, percent of its revenues from silver. Then you've got companies like First Majestic and Pan American in the larger producers. You've got Endeavor Silver as well. When you look at developers, you've got some good sized companies there as well. One that I'm quite keen on in the last while is one called Aya, which interestingly operates in Morocco. Now, Morocco is, since I'm going to say probably only about 7 or 8 years, has really opened itself up to foreign development. So foreign investment and development for probably 50 to maybe 80 years prior to that. It was very much closed, but they are definitely absolutely open. They have quite a good regime in terms of regulation, economics, and so on. And so Aya Gold and Silver has a couple of amazing projects there. They're actually over the next, say, about 15 to 18 months expected to quadruple their production in Morocco, which is just outstanding for a sort of a mid-sized producer. And after that, so that covers everything up to sort of developers. And so that leads us to silver explorers and a couple of companies that I like there. Well, the first one would be Suma Silver. They have a couple of really good, I believe you could consider both to be flagships. One in Nevada called the Hughes Project. That's in Tonopah. It's actually kind of the eastern half of the Tonopah district. And then you've got their second main project is in New Mexico called Mogollon. And that's a historical area that has produced silver. I really think that they have high potential in both areas for some really high grade discoveries. I mean, as I say, they've both produced over prior decades and really high grade stuff. I think that with all of the work that they're doing, drilling and so on, across this summer, we're going to see some very interesting news. I mean, you can go back, look at their prior press releases. It's all been very encouraging in terms of the grades they've come across, the length of the intercepts, the depths, etc. And so very much, I think, should be on people's radars. One other that I think is worth paying attention to is we've got in the Golden Triangle, that's Dolly Varden Silver. They actually, I think it was last year, bought out a neighbor that had a very big gold and silver project that really looks like it really could become quite something. Again, very high grade spending quite a bit on a lot of drilling. We're going to really see this project, I think, transform itself over the course of the next sort of maybe 9 to 12 months, where we're going to get a lot more information. A lot of gaps will have gotten filled in, and I think that the resource there could grow dramatically as well. So a couple of names to keep an eye on.
And both companies run by a couple of young guns in this market. We talked
Absolutely.
earlier. We talked a little bit earlier about who's this next generation, and Sean Kuhn's absolutely killing it. And I got a lot of respect for Galen. I've actually worked with him for 3 or 4 years now since this went public. Really respect what he's doing with that company. They managed to sock away quite a bit of dough. I think just last February. So that's a good thing about Suma, is they're fully cashed up. I think Dolly Varden's got quite a bit of cash too as well, but looking for these juniors that have kind of managed to, weather this storm over the last year and a half and still raise significant amounts of money. Those are two both great names there for sure. What about jurisdiction risks? Like we talk about, we're going to have to find more silver to meet the demand, period, hard stop. We all know silver's going higher, but where is this coming from? Mexico is obviously some of the best silver districts in the planet. We've got problems in Mexico right now, right? You could probably, the list goes on, like where do you really want to be? And you're comfortable with places like Morocco and Colombia and Ecuador and in different jurisdictions like this, or do you like to stick more in your North American lane?
So I would say Ecuador, Colombia are having some challenges right now. You could say the same for Chile and Peru to some extent as well. Believe it or not, I'm actually relatively keen on Bolivia. I kind of feel that Bolivia is at a point now which reflects, which is probably, I'm going to say hopefully, a decade ahead of Chile and Peru. In other words, they've tried these kinds of things. They've seen that it hasn't worked. And if you're in the right names, the right plays that are properly connected, well run, good projects, then I think that it is a place that you could consider. As you said, Morocco, I think, is very much under the radar. And absolutely the best way to play them would be through Aya. You're right. In terms of, other than that, Mexico is the place. It's by far the largest silver producing nation. And yet I've got charts in my presentations that show that both Mexico and Peru, that's number 2, or Peru and China are close to number 2. They kind of are back and forth. The numbers out of China are not so reliable. So we pretty much, discount that to some extent. But both of them both Mexico and Peru, the number 1 and number 2, have seen their mining silver output drop steadily over the last 5 to 6 years. Mm-hmm. So that is absolutely a concern. Where can you look? I think, believe it or not, you have to look to Canada and the US, because you've got companies that have high-grade projects, are producing, are well set up, are looking to grow these projects. I'm going to say the jurisdictions within Canada and the US that kind of make the most sense for Canada: BC, the Yukon, in the US, Nevada, New Mexico, Idaho. These really seem to be some of the best places to find more silver. And, if you can find companies that's what I try to do on a daily basis, is find companies that are set up there, working there, great teams, great projects, well cashed up, able to weather these storms. I think they're going to perform quite nicely as this bottoms and eventually turns.
Speaking of bottom, it's been a long time since I've seen a dichotomy between equity prices and metal prices. Can you give me your opinion on that? Why are we in such a trough right now?
I think that it's all driven by the prices of the metals, and when they wake up, that will excite the market. And people don't realize, they look at silver as an example and they say, okay, $22, $23, that's still half of what its all-time high is, whereas gold is close to its all-time high still, in nominal numbers at least. So they're just not excited. But it all depends on when you got in. And if you look at silver going back, say, 3 years or 4 years, silver is actually about 40% above and has maintained an average of about 40% above its prior 3 years. So if you say, 2013 to about, no, let's say, sorry, more like 2016 to 2019, silver averaged in there probably closer to about $15 to $16. And now we're at $22 or so. We've been between, say, 22 and 30 for the last 3 years almost.
Yeah.
It's not gangbusters, but it does help plenty of projects to at least maintain a reasonable profit margin. But when the price of silver wakes up, and it does, because it goes through these long periods of being very quiet, and then it just absolutely explodes higher. And when it does that, you
can't catch them. Like, they're gone.
That's right.
Yeah.
Exactly. They're going to gap up. There's not enough supply of the shares, as much as they issue shares to raise money.
Yeah.
There won't be sellers. There'll be a lot of buyers and no sellers, and the prices will gap up. And then people will feel they've missed the boat. Well, now is absolutely the time to be looking. And I know we all say it. All of us who are in the industry, and especially in the, involved in juniors, are going to say it, that this is opportunity, but it absolutely is. And people just get bored, and it's unfortunate that they have short memories, because, you just have to look at the first cycle, which was, I believe, that only the first half of the secular bull, which started in about 2001. Silver went from $4 to $49 in the space of 10 years. That's just tremendous.
Yeah,
so
huge.
You've got, and it doesn't mean you have to take outsized risks. You've got companies like Wheaton Precious Metals that we mentioned before, Pan American Silver, that were up about 16 or 17 times in the space of, for one of the two, I can't remember which, but I think in the space of 3 years, Wheaton Precious Metals was up about 17 times. That's just a phenomenal price growth in one of the largest cap silver producers in the world. So the potential is just off the charts. It really is.
So if I love silver, which I do, should I love gold? Is it the exact same thesis?
It's not exactly the same thesis. It is very close. There's no question about it. And I think one of the appeals of silver is this sort of FOMO aspect, the fear of missing out. And I think that's why silver gets explosive later in cycles, is that gold is king. It always has been. It always will be. And people follow it a lot more closely. And that's why you have all these gold newsletters, like we talked about at the very beginning. But when gold goes, and it will, and it goes to 2,500 or 3,000, and people will start to pay attention, and they'll feel like they've missed the boat, and they'll say, wow, I can't buy an ounce of gold at $3,000. What else can I do?
Yeah.
And if silver is $40 or $50 at that point, it's going to look exceedingly cheap compared to gold.
Yeah.
And exceedingly affordable. And even if the premiums are at 50% or 60%, it's still extremely affordable for an ounce of silver versus gold. And people will rush to it. They've done it before, and they will do it again. And so you just need to get in and be patient and sit on these positions, and they will produce.
Yeah, I tend to gravitate towards physical silver, just because it feels damn good holding that silver ounce coin in your hand for a lot less money.
I say that in the book. Exactly. I say that in the book. If you've never participated, if it's something that's really new to you, that should be your first step. Even if you're paying a high premium on a couple of silver ounces, just go out there, do a little bit of research, go to one of these big name dealers, order a couple of silver coins online from a recognized mint, and have those in your hands. It's a really small first step, but I think that it's an important first step, and it really gets you to relate to what silver is and to the silver market. And I think it'll pique people's interest, and they will want to learn more and have a look at the book. I mean, I really did go out of my way to make it not academic, but readable, and to give readers a complete overview of the silver market, understand where it comes from, why it's brought us to where we are today, the history going back thousands of years. Silver has been money for longer than gold has. It's been money for almost 5,000 years. And it's really only in the last 50 years or so, since the late 60s or 70s, when the US removed silver from its coinage, that we haven't had silver as part of our money. Silver is the name for money in more than 14 different languages around the world. So it's the exact same word.
Yeah.
So, we're living really an anomaly. These last 50 years and not having silver as part of our money it's hard for people to realize. They just don't grasp it, that it's just been part of every day. It's been part of everyday transactions for millennia. And, I think that one of the things people have to be careful of and I talk about this as well in the book, is something called recency bias. Don't feel it's just too dangerous to act, and especially to invest, because investing is all about what's coming, what you have going forward, based on recent past. That's what we call recency bias. For people to think that things will be how they have been in the recent past. I believe we're absolutely in a new paradigm. I think inflation is going to be part of our future for the next decade. I think that 4% will become the new 2% inflation. Yeah. I think central banks are going to raise their targets from officially 2% right now to closer to 3%. And we have, there are dozens and hundreds of studies that show that commodities perform exceedingly well in this kind of an environment. We've had a stock and a bond bull for the last 40 years that probably ended at the early part of 2022. And I think that at least the next decade is going to be a decade for commodities. So people really do have to a little bit of research and understand that, and start to look at how they can bring that into their portfolios.
Okay, so last question. Commodities, the commodities were to be over the next decades, you say. So where do you see silver in the next 5 years?
I say it in the book, and I've said it multiple times publicly. I think that silver could actually go to triple digits. And when I say triple digits, I mean triple digits, $300.
Awesome.
I mean, if you look at, and I don't just kind of pull these numbers out of nowhere, out of the air, and try to be sensational. In the book, I use indicators that apply to the past, to previous silver bull markets, and I bring them forward. Obviously, I make assumptions. One of the most obvious, I'll give you two examples. One of the most obvious is the gold silver ratio, which many of your viewers and listeners probably know and understand.
Yep.
So really, it just to summarize it quickly, right now it's about 83 or so, which means that given current silver and gold prices, it takes about 83 ounces of silver to buy 1 ounce of gold. Now, over the last 20 years or so, the average has been 55 to 60. When silver peaked in 1980 at $50, which was the end of its decade-long bull run, that ratio, and that was with gold at $850, which was its own peak. But silver had climbed so much more and so much faster in the prior 6 months that the ratio made its way all the way down to 15.
Oh, wow.
So a ratio of 15, and I project, or I expect that gold will go at least to, say, $5,000 in this bull market cycle. And so if you take $5,000 gold and you use a 15-to-1 ratio, that gives you $333 silver. And if you look at another ratio, which is the average US home price to the silver price, it also peaked in 1980. And it peaked at, I think it was about 1,400 to 1. So even if you go with current prices, so let's say the average US home is about 450 or so thousand US dollars, and you do a 1,400 to 1 calculation, you end up again with somewhere around $330 for silver, per ounce of silver. So I think, and there are a couple of others, but I do think that if you make these, if you do assume that you could have this blow off top of kind of a mania phase at the end of the cycle, that you could see silver go towards make its way towards $300. And I don't think it's going to get there. I don't think it's going to get there and stay there. I don't think it's going to get there and stay there, and that it would be healthy for any of the market, any aspects of the market, especially the industrial side. So I don't believe it will stay there, but I do think that it could be in our future. And if it does, I mean, what would happen to these juniors, these silver juniors, or anything with silver in its name would be
they'll go crazy. They'll go ridiculous.
They will absolutely go ridiculous. And so, even a little bit of exposure to that in some better names that you're willing to sit on for, the full cycle could actually pay off extremely well. And so that's where I see silver potentially going.
Well, there's a mania in every cycle. We just got to wait for it, and it is coming for sure.
Exactly.
Peter, I'm so grateful for your time. Thank you so much. Love to have you back on sometime in the future. I'm sure we could talk for hours about this market. Listeners, Peter Krauth, author of The Great Silver Bull and editor of the Silver Stock Investor Letter. Subscribe to his letter if you enjoyed this interview, and be sure to head over to Amazon and get your hands on this book. It's a must read. And once again, if you enjoyed this interview, be sure to join our network, subscribe to our page, comment on the videos below, and share them with your like-minded investors. Until next week, folks.